News alert! On Monday, March 21st, the stock market put in a dismal performance with the Dow down over 200 points, amongst worries about rising oil prices and inflation, and hawkish comments by Fed Chairman Jerome Powell that we need to raise interest rates quickly. Not all stocks were losers, however, as oil stocks were higher, and major oil exploration and drilling company Schlumberger was up $1.46 to close at $41.19. Schlumberger has been up on a tear this year, soaring from $30 a share back in January all the way up to $46 earlier in March, only to ease back down to $38 in the middle of the month, and climbing back up higher since. What's in store for Schlumberger? How will its business be affected by the war in Ukraine and rising oil prices? Has it reached its highs already, or will Schlumberger continue to climb? Hello and welcome to Stock Market Fever. Today is Tuesday, March 22nd, and today we're going to look at the rising fortunes and future predictions for Schlumberger. On March 18, 2022, Schlumberger, a major oil exploration and drilling company, announced, "We have watched with immense concern as the conflict in Ukraine has escalated," says Chief Executive Officer Olivier Lehoux. "First and foremost, we are deeply focused on the health, safety, and security of our employees, colleagues, and their families in Ukraine, Russia, and throughout the region. As the situation has developed, we have been evaluating our path forward and have decided to immediately suspend new investment and technology deployment to our Russia operations. We continue to actively monitor this dynamic situation and will fulfill any existing activity in full compliance with applicable international laws and sanctions." While there was immediate concern on how this announcement might impact earnings, oil industry experts were brushing it off. In a Reuters article dated March 1st, an unnamed top oil industry expert noted, U.S. oil field companies could withdraw from Russia and easily replace the lost revenue with an expected boom in new oil and gas drilling elsewhere. Oil stocks were higher today, and oil exploration and drilling companies went higher with them. Schlumberger rose as the price of Brent crude rose 5% in just one day as a result of reports that a Saudi oil refinery was attacked by Houthi rebels, slowing output, and calls by European Union Lithuania's Foreign Minister Gabrielis Landsbergis tweet calling for the EU to ban the import of Russian oil. And what about Schlumberger? With trailing earnings of $1.31 per share, Schlumberger is trading at about 30 times price earnings. The company announced yesterday that they will hold a conference call on April 22, 2022, to discuss the results of the first quarter ending March 31, 2022. And how much earnings are they expected to report? According to Zacks, quote, "The company is expected to report earnings per share of 34 cents, up 61.9% from the prior year quarter. Our most recent consensus estimate is calling for quarterly revenue of $6.04 billion, up 15.63% from the year-ago period." Zacks also notes that analysts have recently been raising their earnings estimates for Schlumberger, indicating they are optimistic about the company's prospects as the price of oil rises. It would seem reasonable to predict that the demand for exploration and drilling would rise as oil prices continue to soar. Schwab Equity Ratings rate Schlumberger with a dismal F and expect the stock to strongly underperform in their report dated March 18th, noting negative quality and growth and sentiment. However, Morningstar analysts give Schlumberger a solid 4-star rating, noting that they have, quote, "continued to deliver strong financial performance in recent quarters, with higher industry activity leading to revenue increases and margin gains via operating leverage. Management teams are hopeful for pricing improvement in the next few years, which we continue to agree with. The surge in near-term oil prices is likely to lead to a more front-loaded recovery in industry spending than anticipated earlier. Morningstar was also impressed with Schlumberger's recent cost reduction efforts in recent years and gave the shares a one-year target of $49 per share. CFRA analysts, in a report dated March 19th, were also optimistic about Schlumberger, noting, quote, "We think double-digit margins can be restored in North America considering SLB's efforts to reset the earnings power there." Internationally, with more than 80% of revenue projected to come from markets that will experience activity momentum, we see opportunities for margin expansion as well. They gave the shares a 4-star buy rating, but with a one-year target price of only 43. And what does Stock Market Fever think? While we do not offer investment advice, and always caution you to seek the advice of a licensed professional, we are very much of the opinion that oil will continue to climb higher pending any unexpected outbreak of peace in Ukraine, which could slow the trend. We therefore are bullish on Schlumberger and believe it will test its recent highs of 45 and may bounce around there for some time before testing the waters and surging higher, perhaps to $49 a share by the summer driving season. So what do you think? Where do you think the shares of Schlumberger are headed? And what's your one-year target for the stock? Please leave your thoughts and comments below. We'd love to hear from you. And make sure you get future stock market news and alerts. Be sure to subscribe right here at Stock Market Fever.